Professor, Arjun Indian Center, RIS, who we have as chair of this session. Among the paper presenters, we have Dr. Salim Raihan, Professor, Department of Economics, University of Dhaka, and Mr. Mahtab Uddin, Lecturer, Department of Economics, University of Dhaka. Dr. Shaun Ray, Professor, Indian Council for Research on International Economic Relations, Ms. Sylvia Arshad, Consultant at the World Bank, Mr. Syed Sudad Ahmed, Consultant of Sustainable Development Policy Institute, Pakistan, and Dr. Asanka Vijay Singhe, Research Economist at the Institute of Policy Studies of Sri Lanka. Dear presenters, please kindly note that you will receive a notification on the 12th minute to wrap up your presentation and another notification at the 14th minute to conclude. All other participants are kindly requested to keep their microphones muted at all times. I would like to now hand over to the chair, Dr. Prabir De. Thank you.
Okay, thank you very much. First of all, I congratulate Dr. Raihan for continuing his academic excellence in this difficult time, and his team who has been working from the back for presenting an excellent international conference. This is just not one. This is one of those which he has managed so far. So, congratulations to you and your team, Salim Bhai. Now he has given me, a task to moderate the session, and this is a difficult task for me because so many, important speakers, and they have very rich papers. Frankly speaking, I haven't read all of them, but I am going to listen to them very, very, very seriously, and of course I will come back. I have read some of the papers. I will share my views. This session is about trade and macroeconomics part 2, and very much it in jail with the session theme is COVID-19 recovery, context and priorities. Very much it is this session. I'm sure today's presentation, and the papers the speakers will be presenting will carry many important takeaways to support the session theme. So without further ado, what I will do, I will look at my watch. I control the time. That is an easy task for me. I will call one of them on by one, and the order I have received, which is again, this is not in front of me, but if I request the organizers, if you, it is not in front of me, but I can see the program list. Where is it? Just a minute. Yes, session order. Yeah. So I will first I invite this was when you are in digital mode or virtual mode, you have plenty of windows open, and you very difficult to maneuver when you are in Zoom, which takes care of your front page, everything. So sorry about it. I call Mahtab Uddin, important partner for SANEM, for his presentations, and the study that he did with the best of the field survey. He will be presenting the study he did with Dr. Raihan. So, Dr. Mehtab, floor is yours. 14 minutes, that's what total time. You'll get a reminder at 12 minutes. So thank you very much.
Thank you, Pravir. Actually, I will start and Mahtab will complete. So we'll do it jointly, and thank you so much. And I think it's wonderful to see you here too, and also other presenters. So I shared the screen, and Mahtab and I will actually present it together. So this is a work actually SANEM has been doing, and we are actually collecting data quarterly since June last year. And we wanted to understand what is the kind of impact of COVID on the business sector in Bangladesh. So this is a paper actually jointly written by Mahtab, Tuhin, and me. So, and objective, I will not spend much time, as we all understand the COVID has impacted on the economy. And we tried to generate some information by surveying firms from 14 or 15 sectors of the manufacturing and services sector. and try to understand their challenges, what they're facing, what is their present business status, what is their expectation, and try to understand how they are actually operating in the kind of business environment. So I'll be rather quick because this presentation is a bit long and there are some methodological slides and methodology. I will not spend much time on the methodology, but in the question answer session, Mahatav and I, we can actually respond many of those questions. I think objectives I have already talked about, but let's go straight to the data and methodology. So here, actually, as I said, since last July 2020, we have actually conducted 4 rounds of surveys. First round was 300 firms, 150 manufacturing and 150 service sector. Then from the second round, we started surveying 500 firms. So, and then we had, as you can see from the manufacturing sector and the services sectors and their shares in the sample. And these shares actually we have taken also from the enterprise level survey and the establishment survey, and try to make them nationally representative as much as possible. So the distribution of survey by division, actually you can see that we have 8 divisions in Bangladesh, and since Dhaka and Chittagong, they occupy the major economic activities. So you can see that Dhaka, the sample is drawn from 29% of Dhaka and Chittagong from 19% Chittagong, and rest of the divisions too. And also out of the 64 districts, the survey covered 39 districts. So we tried to actually mention that it's actually a kind of representative survey of all over the country. So you can see that how these, in different quarters, the firms, and since we are actually working with a panel, so we try to get those panel, the panel information. It's not a balanced panel, but since Q1 was a less number of firms, but then we got a similar number of firms in Q2, Q3, and Q4. There was some attrition too, and you can see this attrition towards the last column, but not many, and we tried to address this attrition also. So that means that we actually went to the same firm, every time, and we had some attrition, and we also took care of those attrition using the appropriate method. So how did we measure the business status? So we use 3 different indicators. You can see one is that we try to estimate the present business status index, and then the business confidence index, and also we calculate another index called enabling business environment index. So in the case of present business status index, we have 6 areas: profitability, investment, employment, wage, business cost, and sales. And so the same areas are also applicable to business confidence index too. So present business status index and business confidence index, PBS and BCI, they all have, these two have the same kind of methodology covering 6 areas. And we also have these Likert options from much worse to better, much better. And you can see these Likert options were also applied, to measure their responses. And also you can see that the weights, much worse, it carried weights of 0, and much better is 100, and worse, same as before, and better, actually they had scores in between. I'm not really getting into the methodology of the constitution indices, but we actually, at the PBSI, at the farm level, we had the same weight, but from the farm to at the sectoral level and the aggregate level, we use the weights from the the kind of distribution what I showed earlier. So, but again, we can come back to this methodological issue in the question answer session if anyone asks any question. Now, coming to the enabling business environment index, we actually had questions of 10 different areas, starting from electricity connection to availability of skilled workers, transport quality, business registration, property registration, access to finance, tax system, government support for the industry, management of the COVID-19 crisis, trade logistics, and corruption. So these are 10 major areas we had. And then also we had these Likert options for indices from extremely unfavorable to extremely favorable, and you can see that range in between. And also we constructed the indices, using the weights, and also having these the responses. Now, what are the study findings? Let me have some descriptive studies, and then I'll hand over to Mahatav to talk more on the econometric part. So location, I think what I have already mentioned, that most of these firms are actually Outside of the EPZ or industrial park, ownership is actually mostly 98% a domestic private company. And then we also have some female ownership, partially owned female ownership, 33%, fully owned by only 1%, and then no female ownership in the case of 66% of the farms. And then also you can see the distribution of farms by farm size. We had 43% micro, 17% small, 10% medium, and 30% large. And in the case of export status of the surveyed farms, you can see that degree of export like 0%, and you can see the major part. And more than 90%, you can see that this yellow part. So it's more than a quarter of the farms actually are export oriented, more than 90%. Now, looking at the present business status index, you can see that the 4 round, there was an improvement. And April, June last year, you can see that it was just the first round of COVID. It was a very, very bad situation in April, June 2020. And then there was some improvement in July, September 2020. But then we can see that the improvement has remained kind of flat. So the present business status index actually showed that the kind of recovery of the firms come from the COVID scenario, it gained some pace, but then actually it slowed down and the pace got slowed down. Also, you can see looking at different 6 areas of the PBSI, we can see there are different areas are actually having different levels of recovery. Especially if you look at in the case of business cost, actually the improvement has remained very, 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 very slow. And also we calculated present business status index at the sectoral level. You can see that from ready-made garments to other services, these 15 sectors, and trying to portray that the red line is actually the average one, the overall present business status index. So if you compare from the first round to second round, you can see the red line has gone up. That means the present status index overall has gone up, and at the sectoral level too. But then from the third round and fourth round, there have been some improvement, but actually the improvements have not been that great. By farm size, you can see that actually whatever improvements in the status index, we have seen that the larger farms they gained more. They had a better improvement compared to micro and small and medium scale enterprises. Also, we found that in terms of stimulus package, not all farms got stimulus package. Actually, we found that on average, 22% of the surveyed farms received stimulus package, and ready-made garments, they're actually recipient of 58% of the surveyed ready-made garments, they received stimulus package. But you can see many of sectors, the stimulus package recipient was very, very low. And on average, 22% of the farms received stimulus package. But whoever received the stimulus package, what we found that their present business status index was better than the farms who did not receive the stimulus package. And then even in the farm size, you can see the larger farms, they are the recipient of the major stimulus package, whereas the micro, they were close to around 5 to 6%, the small around 15 to 17%. And then you can see the medium farms also. On average, as I say, 22%, it is actually driven by the larger farms. Now I request Mahatab to speak on the discuss on the regression model. Mahatab, you can tell me when to change the slide.
Sir, thank you so much. Sir, could you please make me co-host so that I can up my slide here?
You want to up your slide from there?
Yeah,
okay.
That would be better for myself. Yeah.
Okay, okay. So no worries. Just let me stop here, and then I make you co-host. Okay, Mahatab, we can do it.
Thank you so much, sir. So I hope my slide is up.
Yes, yes, you will.
Yeah,
put it in the full screen mode, please.
Yeah, thank you so much, sir. So thanks a lot for giving your floor. As Sir was saying that we had three as per in our this study we have explored a vast area. There are a lot of areas we explored, but in this particular paper, our research questions are actually threefold. First of all, we actually wanted to say whether the present business status index actually whether these are the present business status of the farms improving over the time? Is the improvement the same for all types of farms, like the small, medium, or large farms, or the or has a stimulus package brought outcomes as aimed? Like has there been as expected outcomes of the stimulus package over the present business status index. Also, we wanted to explore how how can a more business friendly environment actually help from mitigating the negative impacts by the pandemic. So against that backdrop, actually, we set out, since we have panel data, and based on some diagnostic statistics, we found out that the panel fixed effect model would be the most appropriate one. So our basic regression model is on the left hand side we have the PBSI, which one is the quarterly PBSI that we just showed to you, and it is the farm level data that we have. And on the right hand side we have the set of explanatory variables. We have farm specific individual effects, and we also have the outcomes. So particularly, we have a set of explanatory variables. For example, we have EVS for the farm. We have the down variable for stimulus packages. If the farm receives stimulus package 1, otherwise it's 0. We have farm sizes. For example, if the farm is, whether the farm is small, medium, or large. Our base category is the micro farms. And we also have, it is because, as you have seen in our one of the slides, that 40% of our farms are actually micro farms. And there's a vast difference, in the definition between micro, small, medium, and large. So to capture all this, all the categories of farms, we actually put the base category as micro farms. We also included exporter dummy as well as regional dummy. So particularly one thing is that since we have dummies on the right hand side, and since
Dear presenter, you have 2 minutes left.
Yeah, thank you. I think I'll be done by then. So particularly on the it is our model specifically actually shows that it is best if we run the panel fixed effect model, where taking into consideration of the farm specific individual effects. So in each of the regressions that we have run, we actually have ID specific fixed effects. So I'm just getting down to the regression results. In all of the regressions, what we have found is that a significant influence of the EBI, or the Enable Business Environment Index. The higher the value, as you might have remembered, the higher the value of EBI, the better it is. So a positive coefficient actually means that it means that if the firms with a better Enable Business Environment Index, they had better performance in terms of PBSI. So if there is improvement in EBI, that will definitely increase the business status of the firm. Also, we control for the each of the quarters. Our base quarter is the Q1, and so in each of the quarter, actually we see significant improvement on the PBSI compared to the initial base quarter, which was April to June 2020. And we also included the exporter dummy, but we didn't see any difference between the exporter and non-exporter. So the exporter firms PBSI, or present business status index, it doesn't vary with regard to the compared to the non-exporters. We didn't find any conclusive evidence with regard to stimulus recipients. The sign is not significant. But what we have found is that farm size has a strong impact. The small farms, compared to the micro farms, they perform better. And compared to the micro, but if you see the coefficient, you will see the coefficient of the medium farm, it is much larger compared to the coefficient that we see for the small farm. If you see the coefficient of the large farm, you see it is almost double to what we see for the small farm. So you see the larger the farm, they have the larger gains in terms of improving their business or weathering the impact of the pandemic. So we also, taking into consideration of other, we also, ran regression with the variables like small farms, and whether if that farm took the stimulus package, large farm, and if it took the stimulus package. And we actually, in none of the regressions, we found any conclusive evidence with regard to whether stimulus package has helped the farms or not. So there are some confusions and policy recommendations. So broadly, our evidence actually shows that business environment has significant impact in weathering a pandemic like COVID-19. It also shows that farm size actually matter. Large farms, they have higher capability in terms of mitigating the negative impact of the pandemic. And unfortunately, we didn't find any significant impact of the stimulus package. Particularly, it could be due to the farms who were particularly better. They didn't suffer the package, or they actually, or maybe they found these stimulus package insufficient, or maybe they were already in a bad situation and the stimulus package was not sufficient enough to cover up the losses. So we actually, our survey findings, I will conclude within a minute. Our survey findings actually, what it shows is that the firms who actually receive the stimulus package.
May I intervene? Let's actually, because we have time is over. So if needed, we'll come back to this slide later. Okay.
Okay.
Thank you.
Okay.
No. Let's. I think we should keep timing. So let's allow chair to request for the second presenter.
Okay. Sure.
Thank you.
Thank you, Mahtab and Dr. Rayhan, for excellent presentation. Yes, when we say after 2 hours, so 5 speakers, I think we will have time in the second round. So now, may I request the second speaker, Professor Sawan Roy. Dr. Roy, the floor is yours.
Thank you, Chair. And thank you to the organizers. Let me start by sharing the presentation. Is it visible?
Yes, very much.
Yeah. Okay, so we'll be talking about regional value chains and whether there are opportunities due to COVID for India and ASEAN. So the background of this presentation is that even before COVID, India and ASEAN have a free trade agreement, and they have been renegotiating this free trade agreement. While India is a very, from the Indian side, the ASEAN region is very important. From the ASEAN side, India is not so important. And what happened is that COVID saw a lot of decline in trade, similar to the global financial crisis. But the recovery was actually led by the East Asian countries, and the recovery was led by the East Asian countries, and that is where we are plugging our paper in. So this is an outline of the presentation. I'll briefly talk about the background and motivation, the objective of the paper, the literature review, the empirical exercise, and the policy implications. So as I mentioned, that the rebound was led by China and the East Asian countries, and part of the story has to do with global value chains. Now, the way we look at global value chains, there could be two kinds of linkages. There could be upstream linkages, which is foreign value added in exports, or downstream linkages, which is exports that are incorporated in other products and re-exported. The importance of imports comes from the fact that countries can participate in value chains either through backward, that is through intermediate imports, which are embodied in the exports, or through imports which are embodied in the partners' exports and final demand, which are the forward linkages. But imports as a whole is less investigated in the whole value chain story. The main story seems to be exports. And from India's point of view, this since there has been some cause for concern from imports, particularly imports from certain countries, we thought that this is something that would be worthwhile investigating. The other motivation is that while all countries engaged through either backward or forward participation, the policy implications are likely to be very different, whether they are engaged through backward or forward chains. Now, this graph actually shows the ASEAN's share in Indian exports and imports from the period 1996-7 to 2019-20. And you can see that actually there are, in some sense, two distinct periods, because the import share before 2003-2004 was higher than the export share, but thereafter the export share has been higher of the ASEAN, and the import share has fallen behind the import share. As I mentioned, India and ASEAN have signed a free trade agreement in goods, and this graph actually shows India's share, ASEAN share in Indian goods export was 11.34%, and in goods imports was 10.65% in 2018, and it shows the variation from 2008 to 2018. Now, the concerns that India has put forward as far as the agreement is, ASEAN FTA agreement, is that India's trade deficit, of course, has multiplied, and some observers have pointed out that the quality of trade has also declined. Since this agreement is under review, this would actually feed into the process. The findings of this paper could actually feed into the process and the review that is undergoing. I'll just skip this slide and come to the motivation for the paper. So the motivation for the paper is basically the factors that affect GVC integration include things like regional trade agreements, so the ASEAN trade agreement, investment barriers to multinational corporations, infrastructure development, speed and flexibility of movement of physical goods and information, effectiveness of legal and regulatory systems, efficiency of services, developing a skilled workforce, friendliness of business climate, capacity of domestic firms, often SMEs, which can contribute to the supply chain. But other factors that are also very important include border administration, market access barriers, and transport logistics. And in the context specifically of imports, it has been said that some industries are very critical for the functioning of the economy. And if imports of certain industries were actually shut down, then the effect could be quite significant and quite drastic. And this is actually forms the motivation of our paper. So the objective is to examine the role of imports in India's GVC integration with the ASEAN countries. And in the context of the India's links with the ASEAN GVCs, what we feel is that there is need to disaggregate India's import and disentangle its import policy to focus on the regional value chains. And we attempt to estimate an import demand function for the ASEAN region for India. Briefly, the literature review. There has been several papers that have talked about imports, though much less, of course, than exports. Specifically focusing on the intermediate import demand, Fukumoto has estimated the long run and the short run elasticity of China's disaggregated import demand with respect to the relative prices of imports for the period 1988-2005. And he has obtained that the imports of intermediate goods is co-integrated with exports, and imports of consumption goods particularly is co-integrated with GDP and disposable income. In the context of India, the aggregate import demand function has been estimated by some authors like Datta and Ahmed and Moitro. And Datta and Ahmed have suggested that the import demand is largely explained by real GDP. Demand for imports, on the other hand, appears to be less sensitive to import price changes. And of course, the period in question is very important because these sensitivities could depend on the specific period in which the study is based. Some other studies have also been done, and they have been summarized in this paper by Mishra and Mohanty. Continuing with the literature review, in the case of intermediate imports, one of the very important findings in the Indian context was that this paper by Goldberg et al. In 2009, who observed that India, in fact, experienced a surge in overall imports, with real imports rising by 130% between 1987 and 2000. And much of the surge actually came from intermediate imports, not so much from final goods. And a large part of the new imported imports originated from more advanced countries, and new imported varieties exhibited higher unit values relative to existing imports. In a later paper, Goldberg et al. Also have used detailed trade and farm level data to investigate the relationship between declines in trade cost, imports of intermediate inputs, and domestic farm product scope. And they find that there has been very substantial gains from the imports, thereby underlying the case for looking at Indian imports particularly, and in subsequent periods. So the exercise that we have done is basically, it's an Ardl model. So we have actually used this, the methodology that has been used is the function, the import demand function for imports from ASEAN in our case is expressed as IMPT, which is a function of GDP, the exchange rate, and the trade as a percentage of GDP. The variables include real imports from ASEAN, GDP at constant prices, exchange rate with the US dollar, and trade as a percentage of GDP. The frequency of the data is annual, with the time period ranging from 2099 to 2018, and natural log of all the variables has been used. As a first step, the order of integration of all the variables has been ascertained by the augmented Dickey-Fuller test, and the ADF test indicate that some variables are I0 while others are I1. And so this warrants the Ardl bounce test, and which is what we have done. The results of the Ardl bounce test, which I will show in a moment, show that the null hypothesis of no level relationship can be rejected, as the estimated F statistic is greater than the critical values for the I1 regressors, and the T statistic is less than the critical values for the I1 regressors. So this is basically the Ardl bounce test, and you can see the critical values at 1% and for I1 and I0 at the 5% level. And the short run as well as the long run estimations have also been conducted, and the coefficients have been included. And this is basically the results of the long run on the top, and you can see the results for the short run at the bottom of the of this table. So I will briefly just talk about the results. So the long run coefficients of GDP, exchange rate, and trade to GDP have been have the expected signs with GDP, and the exchange rates long run coefficient is also significant statistically. While the short run coefficients of GDP are statistically significant, they are at different levels of significance. And the coefficient of the first difference is positive, while the coefficient of its lag difference is negative. The coefficient of the first lag difference of trade to GDP is statistically significant, but it is negative. And the error correction terms reflect that the speed with which the adjustment towards equilibrium is made is negative and is statistically significant. And then for some other tests have been done for basically to look at serial correlation, heteroscedasticity, and a bunch of couple diagnostic tests. I'm not reporting all that here. And I'll briefly talk about the policy implications and the Indian import policy, and how this can then be used basically in the context of the ASEAN FTA. Now, as is well known, India actually followed a very restrictive trade policy for many years after its independence, and it only liberalized its regime in 1991. And so in 1991, what happened is that at that time, India had one of the highest tariffs in the world. And in 1988, when they peaked, they averaged between 120 to 140%. Now, since then, of course, this has been dismantled. The quotas have gone, and a lot of the tariffs are now actually, a bulk of the tariffs are actually between the 5 and 10%, which this is the WTO trade policy review for India in 2015.
Dear presenter, you have 2 minutes left.
Yeah. And then the other things have been discontinued, for example, monitoring some of the agricultural products which were sensitive, etc. So the average MFN tariff, which was about 13% in 2014-15, rose, increased from 12% in 2010. And so after that, in fact, in the last 1 or 2 years, we have seen on a couple of goods, the tariffs have increased even further. And particularly so after between 2014 and 18, and also afterwards.
Now, Sawan, what if you come to the last slide?
This is actually my last slide.
If you spend a little bit more time for takeaways,
Sure.
Yeah, the policy implications,
absolutely.
That will interest. Thank you.
So basically, now since we are now almost over with the second wave, and much of the restrictions have been lifted. We have seen a recovery in economic activity, but what COVID has shown us that how the transport networks and the productive links, not only within the domestic economy, but also in global supply chains. And India had one of the strictest lockdowns as the virus spread last year, but then what we have found that as the spending has come back to normal last year, some of the economic activity has resumed, but the recovery is far from there. And in fact, since we have been hit by a second wave, the recovery is going to be much longer. So what we have done in this paper is we have estimated, as I mentioned, the Ardl bounce test, and I presented the results. Now, basically, what the results show us is that it strengthens the claims that our integration, India's integration, is through backward linkages, and which is through imports, and we need to strengthen those. And apart from that, we also need to encourage FDI, and all of these policies should definitely be helpful in reviewing the FTA with ASEAN going forward. Thank you for your attention. I can stop sharing.
Thank you very much. Sorry to interrupt, because your last slide and analytics were much interesting for audience, and I guess for the audience, and of course for me. So thank you, Dr. Shawan Roy, for an excellent presentation. I have a particular interest on the subject, and so looking forward to having more interaction on it, and I hope there could be some questions. প্রচুর প্রশ্ন আসবে এই প্রেজেন্টেশনের উপরে, sorry to coming in Bangla as a mother tongue. Okay, let me move to the third paper in this series, and the third speaker, Shelvia Arsad, Dr. Shelvia Arsad. If we are here, please, floor is yours. 14 minutes also to you.
Thanks, Chair. Let me share my screen.
Yep.
Yes, you should be able to share the screen because you have been made co-host. Okay, so it's coming. Thank you.
Okay, thanks. So greetings, everyone. Can you, okay, I think.
Yeah. Perfect, please go ahead.
Okay, thank you. So greetings, everyone. I'm Sylvia, and first of all, it's an honor to be here, and special thanks to Sanem and Dr. Salim Raihan, sir, for having me. So with my co-author, Robert Baer, we have tried to investigate whether electricity consumption can track economic fluctuation in Bangladesh. So the motivation behind the paper is to find out high-frequency indicators which can be used as a proxy of economic activities. Traditional indicators of economic measures are often available with substantial lag and often at national level only. And Bangladesh does not publish quarterly national accounts estimates. To date, the final estimates of FY20 are not available. So assessing the economic situation in real life can be really beneficial for rational policymaking. And high-frequency indicators of economic activity can be used to evaluate the economic impact of containment measures during COVID-19 pandemic. And the long-run relationship between electricity consumption and economic activities are quite well-researched. Apergas and Pani have found a causal relationship between this variable of interest for 88 countries over the period of 1990 to 2006. And in higher, upper middle and lower middle income countries, the causality runs in both directions. However, for lower income, we only see a unidirectional causality. Then Masudud Zaman identified a similar causality for the period spanning from 2000 and I'm not sure. Okay, thanks. Identified a similar causality for the period spanning from 1981 to 2011 in Bangladesh. So electricity consumption can be used to track short-term fluctuations in economic output. For instance, Chan found that electricity usage in Europe declined between 10 to 15% during the acute phase of COVID-19. Historically, a 1% drop in electricity usage has been associated with 1.3 to 1.9% drop in output. And a similar one-to-one relationship in US has also been observed when they integrated the global financial crisis. My co-author, he also found in his another paper that energy consumption declined strongly in India after a national lockdown was implemented in March 2020. So to conduct this study, we have scrapped the daily electricity consumption data from Bangladesh Power Development Board, and the data covers period from February 2010 to May 2021 for all the divisions. And using the R tabulizer toolpack, we have used the writer methods to extract the tables. When the standard method failed to detect the tables, we resort to another method of area extracting. Even after this method, approximately 2.3% of the days couldn't be detected. And for those data, we have linearly interpolated them. So what do we see from the data? The figure on the left-hand side, we see as the country is getting richer, the electricity consumption is growing over the years, and we also see a seasonal effect. Besides, one would also observe that there is a strong day-to-day fluctuation. And the figure on the right-hand side actually shows that the electricity consumption per capita varies across the divisions. And as one would expect, a more developed division, for instance, Dhaka, has a higher electricity consumption per capita. Moving forward, we thought it would be more interesting if we can see if there is any correlation between electricity consumption and SDG indicators. So the figure on the left-hand side actually shows an anticipated outcome. For Rangpur, for instance, where the poverty rate is quite low, we see a lower electricity consumption per capita, and for other divisions, vice versa. And for from figure 4 and 5, we see that when a division has access to electricity, and higher access to electricity and higher density of farms, the electricity consumption per capita is also higher. Then we also see the electricity consumption in Bangladesh is also strongly correlated with major macroeconomic indicators. So when we see account for manufacturing growth, we see a strong correlation. And when we account for industrial production, which is an average of sectoral growth, we still see a strong positive correlation. For exports, the correlation is a bit lower, however, still a positive one. Moving forward, so the changing pattern in electricity consumption can be really insightful to see the economic impact of shocks. That brings us to figure 9, where we see that average electricity consumption growth during a disaster month drops around more than 10%, and that actually picks up in the following month, then overshoots in the second month after the disaster, presumably for the disruption that takes place during a disaster. And for that, to see this relation, we have taken into account some major disaster, for instance, Cyclone Runu in 2016, major floods in 2017, 18, and 19, and Cyclone Amphan in 2020. Then when we take into account the national lockdown that was imposed in Bangladesh for the first time in March to May 2020, we see a substantial decline in the quarterly electricity consumption in Q4 of fiscal year 20. Again, quite intuitive one. So besides looking at this changing in consumption growth, it would be really helpful if we can see how much this electricity consumption with the actual data changes, and to what one would have expected if there is no shock. And that brings us to estimate a baseline model where we try to control for a few indicators. For instance, we control for day of the week of the year in variables to control for seasonality. Then whether there's a holiday, whether the temperature of the day is above 20 degrees Celsius, and then also adding a linear time trend and Ramadan dummy. So why did we control for temperature about 20 degrees Celsius? That, from figure 11 on the left-hand side, we can actually see that the temperature associated with lower electricity consumption, which is 20 degrees Celsius. So as the temperature goes above 20 degrees, the electricity consumption tends to increase in Bangladesh. So after this baseline model, we tried to see whether we tried to test the statistical significance of deviations from predicted model in the time of economic turmoil. And for that, we have added daily fixed effects. And then the model can be used to predict the magnitude of economic fluctuations during recent global pandemic. Moving forward to the outcome, we see from table 1, in the second column, the model 1 actually shows that the electricity consumption in Bangladesh closely moves around the trend. And alone, the trend can actually explain 84% of the variation in the model. Then when we integrate the week of the year fixed effect to control for seasonality, that actually increases the explanatory power. Then we move to when we see in the model 3 and model 4 outcomes, we see that on holidays, electricity consumption tends to be almost 7% lower than on a usual day. And on weekends, on Friday and Saturday, it's lower around 5% and more than 1% respectively, lower than any usual days in the week. And if the temperature exceeds 20 degrees Celsius, we see the electricity consumption increases by almost 3% for every 1 degree Celsius increase in the temperature. And during Ramadan, electricity consumption tends to be 4.6% higher than usual days, in line with higher consumption during this period. So now that we have a model which predicts or have a baseline model for comparison, we move forward to our COVID-19 fixed effect model, where we see the deviation of electricity consumption from the model predicted in Dhaka. We are presenting Dhaka model because the data was less of a noise, and also would give more precise outcome. So what we see is during the first lockdown, end of March to May, electricity consumption was substantially lower than predicted, approximately 40% lower. And then relaxation of lockdown had accelerated this electricity consumption. And when the second wave hit, electricity consumption declined again around November onwards. Then the deviation during this shock are statistically significant at 5% level. And during the third lockdown, so far we do not see any decline, and which is again quite intuitive given that the third wave has been so far less disruptive than the first one, and could be suggesting strong adaptation to COVID-19 containment measures. And some
Dear
of the
presenter, you have 2 minutes left.
Possible.
Okay.
Got stuck, Sylvia, because of the net connection.
Because she was coming to the interesting part of the study.
Yeah, I think probably we can wait a bit It happened yesterday too.
Right.
So maybe she can rejoin.
Yep, that can be done. We have enough time, by the way.
Yes.
Yeah. So we wait for a minute for her, and then maybe in case she doesn't come, then we'll go to next speaker, and when she comes back, she can start from there wherever she left actually. Okay, good. But so many interesting papers. I'm very, very impressed. This one, but in Bangladesh, is it a second wave or?
The way I want to define whether second wave, yes, we are talking about second wave. Also, Provida, this paper's co-author Robert is here too. So Robert, you want to pick up a bit before Sylvia joins?
Yeah, why not? This is a good suggestion, Robert.
Yes. Hi, Salem. Hi, everyone.
Yeah.
Hi, everyone. Hi.
Good to see many of you.
Yes. Great. So you want to say a few words before Sylvia joins?
So the work really started with looking for good high frequency indicators to track economic fluctuations in Bangladesh. And the electricity consumption has really two advantages. The one is it's available daily, which is rare for a high frequency indicator correlated with economic activity. And the second is that we have it by different divisions, which can be helpful if you want to do more spatially disaggregated analysis. And the indicator has proven extremely helpful in the US. It has been used across Europe, and it has been used in India as well. And so our attempt was to look at Bangladesh. And we have some very promising preliminary findings. And
so Robert, I think if you can share with us the kind of preliminary findings, what are the major takeaways? I think that would be great.
Yes. So if you give me 1 second, let me see whether I can actually find the slides, because I have them somewhere too. And then I can show these.
Yeah. I've made you co-host too.
Okay. But I'm not sure I can find them that quickly.
If you don't, we do have those slides. If you want, we can share.
Okay. So then if you just want to go, so you have why don't you share them? Sylvia's back. Sylvia's back.
Sorry for the technical glitch. Let me share the screen again.
Yeah, then go ahead. Yeah.
Sorry, it shows the host disabled the participant.
Now you can.
Okay, thank you. Right. So
the modeling part, yeah. The slide before, yes.
Right.
Earlier slide, just before this.
Yeah. So I was actually almost done.
Okay.
So it's just that one could also can check for elasticity between electricity consumption and economic activity in the short run, and more periods and events can be studied. And this is still a work in progress. We highly welcome any ideas or suggestion. This is it actually. Thanks.
So thank you very much, Sylvia, for your excellent presentations. We have some queries, some comments. More impressive is that you have shared your R file, also the data. Very honest, very honest. So thank you very much, and for excellent presentation, and your co-author Robert as well. So let me move to the next speaker. This session, it is Dr. Syed, Development Policy Institute, SDPI. So Dr. Ahmed, floor is yours. 14 minutes to you.
Yes, Sujat, we can't hear you.
Now, am I audible now?
Yeah, now audible.
Yes. Please put it in a presentation mode.
Yes, I'm just putting.
Yeah.
Okay. Thank you very much, Chair for invitation, and thank you, Salim, Dr. Salim, for this wonderful conference and wonderful session. And it's good to see you back after 3 or 4 years after meeting in Bangladesh for that CGE modeling training. So, topic which I'm going to present is supporting export competitiveness in Pakistan's industrial sector amid COVID-19. This paper is authored by Waqar Ahmed, our Joint Executive Director, my colleagues Asif Javed and Maz Javed. The contents of this presentation are, we will be moving with situational analysis, trading numbers, methodology, findings, and selected recommendations. But before going into this, what actually make us to do the study? First of all, we were more interested in exploring the possibilities for an export-led recovery. That what are those export sectors in or exporting industries? What type of recovery they are expecting from the government, or what type of support they are expecting from the government? What type of facilities they are expecting, and how much resilient they themselves are. Second, enabling non-traditional export sector to pivot better. And third, early growth signs in exports as lockdown is this sustainable? Like in Pakistan, which currently we are into the lesser part of the third wave, and now how much industry is going to sustain that pressure which they were facing in first and second wave, and how much they're going to behave in the coming waves. So moving towards the problem framing, what were the questions which we were interested in looking for? Number one, challenges faced by trade sector during pandemic, revenue loss or gain when we compare this with pre-pandemic and peak of pandemic periods. Type of additional costs faced by trade sector during lockdowns. What are the coping strategies adopted by exporting firms? Let me make it clear here that the coping strategies were not only that of government, but firms or large firms were themselves resilient to deal with the pressure. Next is, did government support have to pivot? Which measures delivered most? What new measures are desired? And finally, type of engagement which would strengthen understanding of loss and response during future crises. Moving towards the methodology and data, first of all, going towards the early evidence, we try to find answers in data on flow and direction of trade, where most of the trade of Pakistan is going, for particularly for the sectors which we studied are textile and leather, agro, and food. These are the 4 sectors which we studied, and for those sectors, we were looking for the trade flow. Second is iterative rounds of public-private dialogues were there. In that we were having the dialogue with the stakeholders, including government, including the government associations, including the entrepreneurs, and then they were followed by the enterprise survey. To extract the information, we move towards the Delphi technique, followed by diffusion index, and then we try to triangulate the qualitative information which we gathered from the public-private dialogues and other key stakeholder meetings. This is actually a sample which we surveyed. The priority was given to the textile sector because most of the Pakistani exports and number of value-added zones are greater for the textile, followed by leather, and then there were the traditional sectors and the non-traditional sectors, agro being the highest one, got the largest share in sample, followed, smallest share of sample, and processed food was the largest with 50 firms, which we served. Now, commenting on the findings, first of all, we will look into the stringency index for lockdown. In comparison to our very good neighbors and very good friends, Bangladesh, India, and we try to just make another thing that bringing in China over here. Pakistan till June 2020 was having most stringent lockdown to cope up with the pressure which they were facing from the COVID. And after early wins and lockdowns from large lockdowns to small lockdowns, then to micro lockdowns, Pakistan eased up after the June 2020 period. Now, this is the overall trade during this whole period, starting from July 2019 till the April 2021. Exports did had a downward trend between April and May 2020, but after that, exports picked up, and for the last 8 months, Pakistan was able to export for over $2 billion consecutively. Within this, we can see that textile did have a jump, but the most encouraging part was Pakistan exports were up because of the digital or trade sector. Because of the services, because of the facilities, because of the change in mode of working, Pakistan's ICT sector did had a greater share in this export. Now, what are the survey findings? First of all, reporting a lockdown, 70% of the exporting firms reported a shutdown during the pandemic, and this shutdown actually ranged from 14 to 52 days. This period, in which firms did face a revenue loss reported by 60%. But here, interesting thing to mention is that the loss was mostly by micro to small size firms, whereas large firms were resilient and were able to cope up with this pressure. 15% struggled to deliver in time because of the lockdown. There were firms where I visited myself in Karachi that the shutdown was so much in a rapid way or in a hurry way that even the operations which were in progress were stopped. 10% of the firms report a shift in consumer demand. While looking at the cash flow or working capital sustainability, 15% of the firms reported cash flow sustainability of less than 30 days because of their dependency more on the government. They were looking at the government to incentivize them. The measures to deal with cash flow challenges include temporary shutdown of operations, slashing volume operating costs, layoffs, and borrowings. With COVID-19 around, we also observed the increase in operations costs. 80% of the firms reported increase in the freight costs as their highest cost. All firms report high costs associated with SOPs, training of labor on SOPs, and hygiene, and even relocation and changing in the work style. Similarly, 14% of the firms reported change in export documentation, which actually led towards the sunk cost in terms of learning. Firms also see adaptation of safe production methods as part of their organizational learning. Now, further going towards the cost, when we see that in terms of fixed costs, rentals, salaries, and access to utilities were at top, followed as markets open fully. There is fear that many suppliers will chase stagnant or low demand. As a result, marketing and publicity expense expected to increase. Agro processing and leather expected higher increase in cost compared to other sectors. Because of the type of goods agro sector in Pakistan is producing, or the leather sector, because those goods are not be kept for longer period in the warehouses or storage. So because of this, they expected higher cost, and they were expecting higher costs here. Looking at the government support and uptake, only 50% availed at least one facility offered under the government package. Because majority of the exporters were micro or small firms, and because of the outreach of those facilities or outreach of those packages, this percentage remained at half of the sample. Agro sector did report the lowest with 13%, followed, and in that, only 17% micro-sized firms could avail government facilitation. There were facilitations in terms of the Central Bank of Pakistan. They provided the refinance schemes. There were relief in tax measures. There were relief in utility bills. There were finances to support employment. The most effective scheme was information on new business opportunities and how to pivot them, followed by relief in utility bills, facilitation with digital payments, and ensuring availability of working capital. While the least effective measures, as was very much clear from the survey, even and with stakeholder consultation, the tax authorities or the tax facilities were the least effective because of the structure which is not that much harmonized so far. The firms also faced HR-related challenges, and 19% of the firms had to lay off their staff because of the output and input imbalance. Highest percentage was faced in the Khyber Pakhtunkhwa province near Afghanistan, where this percentage was 31%, followed by Sindh with 17% and Punjab with 15%. Agro-based industries reported the lowest, and textile reported the highest. And within these sectors, small-sized firms were the higher on laying off their staff in order to meet their expenses. Reskilling and upskilling. Because of this COVID, industries did move towards new ways of working, and 60% of the firms adopted flexible working hours for the first time. 81% firms invested in improving employee skill, arranging new trainings, and 61% used online marketing sales channels for the first time. I'll just quote an example here that even it has resulted in scaling up of the employees in many enterprises or many firms, as they had to shift towards the digital
Dear
sector.
presenter, you have 2 minutes left.
Challenges in acquiring raw materials. 77% report constraints in acquiring domestic imports. 29% reported challenges in acquiring foreign imports. Small-sized firms were the most constrained. Large firms were most constrained than the smallest firms in acquiring foreign imports. The above three were for the domestic imports, and the last one is for the foreign imports. Now, going toward the coping strategies, there were delaying goods delivery, temporary decrease in output, seeking new procurement channels, followed by raising working capital to make advance payments for raw materials. Concluding this discussion, government did continue to focus on production costs amid COVID-19. Transport, warehousing, and logistic chains will continue to be marked by various forms of lockdowns. There should be improved health facilities ensured for workers dealing with moving goods, receiving them at port and other border destinations. Government must revisit tariff and textile policies, including FTAs, to facilitate post-pandemic recovery. Information and networking costs remain high for women-led exporting firms. Increased coordination across commercial officers posted abroad could help, and there should be prioritization of deeper public-private dialogue for accessing evidence from business. I thank you all, and thank you, Chair, for giving me this opportunity. Thank you.
Thank you, Dr. Syed Sujat Ahmad. First of all, I thank you for completing before time. And it was an excellent presentation based on the field level data which you have collected along with your team. Excellent. And we will come back to you with our comments from my side and also from the floor. Without further ado, I then invite the last presenter, last speaker from Institute of Policy Studies of Sri Lanka, Dr. Asanka Vijayasinghe. So, Dr. Asanka,
thank you.
The floor is yours.
Let me share the screen. I think you can see the screen, right?
Yes, we can.
Okay, thank you. Hi all, I'm Asanka Vijayasinghe. I work at the Institute of Policy Studies as a research economist. We co-authored this paper. The co-author is Chaturvika Ayog Raja. Our research topic is Sri Lanka-Bangladesh Free Trade Agreement, and we try to find an initial framework for free trade negotiations, and we further analyze the effect of existing trade policy on South Asia global value participation. We witness increased trade policy activism in this pandemic period. Some countries imposed export restrictions, and some other countries followed import policy reforms. Further, countries started to talk about inward-looking and reshoring economic activities. We talked about globalization like that. However, trade is recovering fast. You can see this is a new data set using the port calls data. The green line is the world trade, total trade and exports and imports. It is recovering. And in Sri Lanka also trade is pretty much recovering. So there is little evidence for this deglobalization talks. And we think that fast economic recovery depends on integration to the global value chains. In this background, we looked at a potential free trade agreement between Bangladesh and Sri Lanka. I think the talks started back in 2017, but with the previous most recent visit by the Prime Minister of Sri Lanka to Bangladesh, this interest was a bit renewed for a free trade agreement. About 2 or 3 days ago, the cabinet of Sri Lanka also nodded to continue the negotiations for a free trade agreement. Sri Lanka and Bangladesh has a considerable trade relationship and also bilateral and multilateral partnerships in organizations. Still, the trade is not huge compared to the both countries' overall trade performance. It is still less than 200 million US dollars. If you look at this bilateral trade intensity, you can see that Bangladesh is emerging as an important trade partner for Sri Lanka. Bangladesh and Sri Lanka both have some export similarity in common markets like European Union and United States. Maybe this is due to the emphasis in textiles in both countries' export basket. So in this study, we ask what are the products that need to be focused in trade negotiations between two countries, and what are the gains from bilateral tariff elimination for both countries. And further, we asked what is the effect of current trade policy on trade integration of South Asia. In this case, we went beyond the conventional trade gross exports as the dependent variable. We use the decomposed global value chain components. To answer these questions, we produce offensive lists for both countries and conduct partial equilibrium analysis. Finally, we estimate theoretically consistent gravity model. Offensive list is a priority list of products both countries can use in trade negotiations. They can ask concessions for those products from each country. A product is included to offensive list if the product is imported by the partner country, and if that product is produced by the reporter with the capacity for expansion, and the reporter must have a comparative advantage. As an example, Sri Lanka should have a comparative advantage in that product. And also the partner must already have a tariff on this product, unless it is useless to talk because we have the preferential access still. we use comparative advantage index for the third purpose, and we use 10 million threshold to filter the products. These products were used in the partial equilibrium analysis. We used the smart of widths. This is a flexible model with we can estimate this model with fewer data requirement. So that's an advantage actually. But there is some problem that these elasticities, it is hard to find product specific elasticities. So our estimates are contingent upon these elasticities. In the final step, we estimated theoretically consistent gravity model using pseudo person maximum likelihood estimator with country, year, and dyadic country pair fixed effects. We used these fixed effects to identify the effect of trade policy. Trade policy was captured by the RTA dummy and the applied tariff, both simple and weighted tariff. This is the gravity equation. We estimated two sets of gravity equations. One thing is for general GVC component of gross exports. The second equation, in this case, the third equation is direct components of GVC. I will explain them briefly in the next slide. These are the dependent variables. For the second equation, we use the direct domestic value addition. That means we can capture or proxy the gross exports. As an example, if Sri Lanka exports a good to Bangladesh, this component is the component consumed by Bangladesh within the country. It is not involved in it for the global value chains. The other component is indirect domestic value added. This is the component used by Bangladesh to process and for re-exporting. So this captures our forward linkage of GVC participation. The third component is foreign value added. That means of the product Sri Lanka exports to Bangladesh, what is the component that represent the foreign value added, foreign inputs in that commodity. So for the third equation, we use direct GVC measures. One thing is domestic value returned home. That means we export something to Bangladesh and Bangladesh process it and re-export it back to Sri Lanka. And direct foreign value added, that means the global, our backward participation with Bangladesh directly. Export values are from trade map and WITS data sources, and also we downloaded tariff data from WITS. GVC global value chain decomposition data from Asian Development Bank's multi-regional input-output data set. This is the offensive list results. We identified 39 products as Bangladesh offensive list at HS 6 digits. And actually this the actual trade value is really low because currently both countries do not have much stronger trade relationships. Among these 39 goods, 21 are intermediate goods, 18 are consumption goods. As an example, frozen fish, potatoes, and turmeric, they are important consumption goods in the list. So after the simulation, we found that Bangladesh can increase its exports to Sri Lanka by 32 to 50% based on the Armington elasticity, substitution elasticity value. The lower bound is about 32%. For this offensive list. In Sri Lanka's case, we identified 115 products that reaches 6 digits. Sri Lanka will also gain about 37 to 67 more exports to Bangladesh in this case. Important thing is here also 75 goods are intermediate goods. So these results show that intermediate goods dominate the offensive list. So in the trade negotiations, both countries have a greater opportunity to increase their global value participation, global value chain participation through free trade agreement. However, the question is that we already have a lot of trade agreements. Some are regional. We don't have bilateral trade agreement with Bangladesh. So what is the lesson we have learned from this existing regional and other bilateral trade agreements? Was there a positive effect? So we use these GVC components and estimated this theoretically consistent gravity model to find out the effect of existing trade policy. This third table shows, in this case, the independent variable of tariff rate is simple mean, simple applied mean, not the weighted average of tariff. In table 4.
Dear presenter, you have 2 minutes left.
Sure, thank you. In table 4, it is weighted mean. You can see that RTA effect is mostly non-trivial. If it is, mostly trivial. If it is non-trivial, it is mostly negative. For all the sectoral exports like agriculture, food, textiles, and total exports. We found the same result when we looked at the direct components of GVC. The RTA effect is either insignificant or negative significant. So we found that the effect of RTAs is mostly trivial or non-trivial but negative. One reason for this may be most RTAs in our region come with complex rules of origin and sensitivities. There are a lot of strings attached to these trade deals. So any positive effect of RTAs can be partially or totally offset by non-tariff issues such as these general regulatory policies, as an example, rules of origin. But we found this negative significant effect of tariff currently existing tariff. So we believe that no conditions attached tariff cuts would be more effective in future trade deals. So our policy recommendation is that one thing is current trade agreements needs to be restructured, and for Bangladesh and Sri Lanka, if they are going ahead for a free trade agreement, they would have to be really careful about these conditions attached to the trade agreements. In case of the offensive lists, both countries can act defensive on those lists. As an example, Sri Lanka might be defensive on agricultural products and rubber products. Sri Lanka is following pretty tight import restriction regime right now. As an example, turmeric was in Bangladesh offensive list, but Sri Lanka has totally banned turmeric imports right now for domestic self-sufficiency rationale. So these are our findings. We thank you for this opportunity to present our work here. Questions and comments are welcome. Thank you.
Thank you very much, Dr. Asanka. I mean, before I open the floor and give my comments on the paper, I would say to you, had Dr. Saman is present today with us, you would have been very happy to see someone is following his footsteps in IPS. So thank you very much for continuing in the work on the trade and regional integrations. I have some queries on your paper, so which I'll come back. Now we have a clearly. Okay. I've been asked to open my video. We have a clearly almost about half an hour time, a little more than half an hour time. So we, and I'm sure that everyone here have many questions, but as discussant as well, I have some quick observations on some of the papers, and of course, I need to go through all of them, and I can come back to you separately, bilaterally through my email. First is because I still remember Dr. Sawan Roy's paper, so it is on ASEAN. So, and I had a quick chance to look at the paper in the PPT before I give my comments. So Dr. Raihan, so shall we follow like this, that I give some my comments, and then we open the floor, we collect the comments, and then we come back to the authors, right? That would be better. We have a half an hour, because next session is very important session.
We can actually extend the time a bit also if needed.
Okay. So we have to close down by half an hour. That's what this original schedule is, right? Now, if I come to Dr. Sawan Roy's paper, because where I think I have some queries. Maybe I see her paper in front of me. Yeah. Now here, first is see many assumptions and in in the paper, and many discussions. First of all, these are very much outdated. I would be using a strong word. Please don't mind, please. So the first is the paper has to be edited a lot with up-to-date information. For example, when author is writing, giving as a background, ASEAN-India trade in parts and components, which precisely we call them in the value chains, etc. And if you look at the discussion and the literature, these are slightly old, in terms of approaching the ASEAN-India trade in value regional value chains, the opportunities for India and ASEAN in the post-COVID. Now, the opportunities and challenges in the post-COVID means you have to look at what is the current that things are at the present, right? Now, when you look at the import-demand function, and in Ardl context, do you have the really how much you are capturing in the real data? That's the point number one. So if we are not perhaps the data gives as author has written, it is 1919 to 2018. So during the COVID time, which precisely started 2000 at least till now, we are still in the COVID time. So if those current part is not added, then somehow we are missing something. First, so this is point two. First is that literature component approach to this whole discussion, that has to be updated. Second is on the import demand function, that how much is we have author as 99 to 2018. Then just out of my query, that GDP and trade as a GDP, both they have taken at current price in the import demand function on the right hand side. Even there is a time series. So an author claimed that they have looked at all the properties, the diagnostics, including autocorrelations aspects. So but both are, isn't it? They're highly integrated, GDP and trade GDP. This is so how this was looked at, because both will be influencing in the same way to your left hand, which is basically imports from ASEAN to India while looking at the GVC. I have no comments because I didn't look after the Ardl bound test results. They are significance level, short term, long term, all these things. So this is the last questions for her paper. That I didn't find enough discussions. Synthesizing the econometrics into a policy. So just even if you like to keep it as an academic paper and you are aiming for cracking a journal, in a serious journal, just like leaving this error correction term that reflects the speed with which adjustment towards equilibrium is made is negative and statistically significant. This is absolutely fine. But many of these kind of results, I think we would expect that you may like to explain a little bit more. First, the long run coefficients of GDP, exchange rate, trade to GDP, have expected signs to GDP and exchange rates long run coefficients being statistically significant. Please synthesize it, for the sake of understanding a policy papers, and at least when you are talking about that you want this paper to be read, particularly those who are reviewing or those who are in the head desk in reviewing ASEAN India free trade agreement. For the information of the author, there is no such kind of reviews happening. It is all about made up by the media. In the ASEAN India FTA, either of the party can call for a review, and there is no such meeting, nothing. It has been purely a political gimmick, by the way. So these are the few quick comments on your paper, Dr. Sawan Roy. Another paper which is very interesting, and which is by Saida. And my queries on her paper, which I have noted, where she said that can electricity consumption track economic fluctuation in Bangladesh? And 90% of the variation has been explained. That's what the presentation she has indicated to us. But see, the one which I don't know any kind of counterfactuals or robustness checks. Where are those? Probably you said that it is a study in progress. I mean, what comes in my mind, the Ramadan, you have added, it's a dummy, basically. And then if during the Ramadan time, of course, there are people will be, closed at their house, electricity consumption will be more. And so economic pattern in that way, it is very much reflected. Which is very, very expected in all your 4 or 5 models. But how much is it that if we leave out Ramadan, if we bring something else? There are many other festivals that goes on. Those are very important to look at this demand for electricity consumption in Bangladesh, or maybe which is not. So this clearly comes in my mind that maybe you need to look, even though this sounds very interesting, the results and have strong implications for the region. The second query is that, is it really a second wave going, we had in Bangladesh in November middle to January middle? I mean, is there any literature? Can you support it? No, you have to, don't answer around, maybe later on, when we open the floor. And second lockdown. So even, maybe these are, somebody may can ask you questions, but where from you got these informations. So these two are very quick comments to your paper. The one I have some comments, really, this is another fascinating paper by the last speaker, Dr. Asanka. It's India, Bangladesh, FTA. Now, we can have another full session on his paper. It is a very interesting Sri Lanka Bangladesh FTA initial framework for an existing trade policy. But quick questions: when you said that you have applied in your presentations a theoretically consistent gravity model, what do you mean by theoretically consistent? Because Anderson and Van Winko, he has only said that his model is a theoretically consistent. Rest are not, because people are becoming in a fashion to use theoretically consistent gravity model in the name to in any directions. So is it, will you call it as a theoretically consistent, or do you say the simple, it is a regression that we have? There is a no harm, in the. But if you tell it is a gravity model, first and foremost is gravity based on the distance or the cost between the I and J. So in your all the explanatory variables on the right hand side, I didn't find. So as a matter of fact, please look at, you said that there is an, in smart simulation, when in the elasticity of substitution on your right side of the variables, since you haven't taken any distance, Bangladesh and Sri Lanka are not adjacent economies, not adjacent nations. You have to fly, or you have to take an ocean, or you have to cut across. If you'd like to go to Bangladesh, you have to cut across India by land. So it takes about time, by the way. In ship, it may be 2.5 days. If it is an air, maybe 2 hours, like that. So since there is a distance and which is fixed, rigid, you cannot break away. So there must be some other cost. If you control that, and if you see that along with other explanatory variables, how it behaves, perhaps the sign might change, significance level might change, and your explanation will go in that way. Policymakers would like to know, where you have said, the offensive list, 52 items for Sri Lanka, and for Bangladesh, it is roughly 15, and reduction of the tariff, both sides, trade goes up about 30 to 33 or in that percentage, when you said, and then you concluded, from the regressions that some policy implications, where you said that, we have a trivial RTA or not, or a non-trivial RTA. So even if you make a very strong statement, in the academic paper, you have to actually support it with very strong literature. Otherwise, it will be very difficult. It will create lots of queries and questions in Sri Lanka itself. So this is an interesting study. Results are absolutely good, but if you change some aspects of your fundamental equation here, which you have taken, maybe results will be different. And again, I would suggest that just running in a baseline and adding a composition may not serve the whole purpose. If you'd like to crack, again, purely my own view, a paper in peer-reviewed journal, you have to come with some more counterfactual, or some other way you can do a comparative perspective, checking to each other results, robustness checks in other way. So this is hopefully the work in progress, and you might come out with a next version, and we will have another discussion this way. So, and I don't have many comments on Dr. Sujat papers. It is again a very interesting primary survey, which is the takeaway for me, which from this, and it has it carries a message to all our main countries in South Asia, that when the survey result findings 3, it says that which schemes were most effective. His sample was 200, which I have noted, 256 samples, and paper introduces, it is also divided between two groups. It is that the most effective schemes, one, that information on new business opportunities and how to pivot, relief in utility bills, facilitation with the digital payments, and ensuring availability of working capital. So these are absolutely, the schemes which are most effective. But the one when in other, your survey findings, I think 4 or 2, when you said the farms whom you interviewed, they didn't receive adequate government relief package or government stimulus. Now, in those cases, those farms, I don't remember exactly this, except medium and small size, what about the irrespective of the sizes? How do you expect them in terms of digital payments? How do you expect them, if they don't get payment for their electricity bill exemptions, or their bank loan, which they have taken exempted for certain, or interest, removal of interest payment to the banks? So how do you look at those? Are there anything that you can draw lessons for in the paper, which will also give our the region in South Asia for others to follow? In the concluding part, I'm a bit curious to know if you can explain when you said the revisit tariff and textile policies, including FTAs, to facilitate post-pandemic recovery. What do you mean by tariff? Is it you expect your import tariff in your Pakistan to be reduced, to increase, go for a more support to the domestic farms, domestic producers, or to be reduced so that there is a demand, pent-up demand in Pakistan because of lockdown, economic crisis? So you need those pent-up demand can be cleared by reducing tariff and the textile. So please explain this. Is it linked with your primary survey? It is really coming up in this way. Otherwise, maybe you'd like to restructure this is in your paper. So these are my quick comments I have to the authors. And on Dr. Raihan, this is also an excellent study. Just in the presentations, when it came up in my mind, I may be corrected that BCI in the regressions, when the two indices that they have constructed, that corruption, somewhere you have taken when you have constructed EBI, the 10 indicators. Now, the behavior of index values, they behave differently. Like in the corruption, if you put them in a scale, and if you put a 1, you mean that I'm assigning 1 means it's the least corrupted. But when you run the regression, 1 will be, deadly for in that case. So similarly, electricity or availability of skilled worker. So how do you manage this scoring? That's what you have used the Likert options. Likert, if I understand, this is just a selection on the online. But really, those who are taken care or not, if you can answer, because I would also like to be corrected, and this will also give a message to the young scholar who will be following, these methodology for their survey. And just also to please clarify, if I'm, in your regressions, in the regression model, your, when you panel fixed effect, that is explained by Mehtab. PBSI was taken in the left side, and in other and in the right hand side, the explanatory variable including EBI score, that is a business index score of the firms. So many I found that they are, if I understood it correctly, many I found that they are the dummy variables, right? The region, the exporter dummy, etc., etc. So how did you manage firm level data, putting them in LSDV model, which is basically a panel pooled panel regressions? How did you assign these numbers? You have all index value. So please explain us, just for an education purposes. Results from regressions and all those are very interesting, and and also the take average. So I have a queries on the methodology part. If you explain, it will be very good for young scholars and also for me as well. So these are the comments from my side, and then I open the floor if anyone is having any questions or very quick comments and observations. We have 10-15 minutes or maybe 20 minutes to go in the session.
Can you hear me?
Some questions on the chat box.
Oh, yeah. All right.
Dr. Abdullah Shibli, he posted, but he probably wants to speak, so we can let him speak. Dr. Abdullah Shibli.
Yeah, Dr. Shibli, please.
Well, I'd first of all like to congratulate all the panelists, as well as the moderator who offered some excellent comments. As you can see, I am in my trail walking and listening to you guys. I didn't want to miss a minute of it. And the last few comments by the moderator, I thought, even though he was, how do I say, not necessarily complimentary, it was very well taken. I hope you take it that way, that his comments would help the papers improve their future versions. I just had only two observations. One observation on the paper by Sylvia, that it is a comment that on electricity and economic activity is interesting. The long-term relationship between these two are well established. Now, I am curious about Bangladesh, obviously, because I'm a Bangladeshi. And so what do you notice for the period between March 2020 and recent times? I mean March 2020 recent time. Has there been any covariability between economic activity and electricity consumption. And I would have thought that when people are staying indoors, consumption of electricity would go up, and that might then have a positive impact on electricity consumption. And even factories are closed, that would be influence the data. Now for Salim and Salim's paper, what I had was, do you think that the small, micro, and cottage industries did not benefit much from the stimulus package, and they are still in a very precarious situation? And I follow Salim Raihan's comments elsewhere, where he said, well, they seem to have been left out. So I just would like to know from Salim Raihan and his team, Mahtab and Tuhin, whether that's true. And also if Sylvia could tell us a little more about the electricity consumption correlation or covariability, which she found. Thank you. Thanks for the opportunity.
Thank you, Dr. Sylvia. Thank you very much, Dr. Sibley, for your comments. I'm sure panelists will come back to you. So there are questions in the chat box. I may not be able to take up all of them. It is basically I have to read out them, and you can yourself access to the chat box. And I see many questions. The first one, which is Dr. Sibley himself, he has asked, and he has already spoken about it. I don't need to repeat it. And there is a questions, subsequent questions from him again, so I don't need to repeat that. He has already done it. Particularly to Sylvia Arsad, he has raised some important observations and some questions also. So please answer to those. I would request Dr. Sylvia to look at these two queries if we have taken note what he said, and if you cannot, then here are also, he has written it in the chat box. Somesh Mathur, he has raised one question, and I think this is for the speaker from Pakistan, from SDPI, Dr. Sajad, that what he has written, I just read them out. In case you feel this is related to your paper, then only you reply. If you think, sometimes professors, very learned professors, they come out with many brilliant ideas, may not be very much applicable to your papers, but this could be a comments and observation which you can take. The Pakistan had 4% GDP growth in 2020-21 due to some sectoral performance of cement, textile, leather, investment from diaspora, and I would not say NRI. In non-resident Indians, it cannot be in Pakistan. It could be NRP, or you have to tell diasporic investments, and the financial package to the modest at the time of lockdowns. Pakistan, like India, had current account surplus, of course, because of your import is less. So the latter, is it due to performance or COVID-led decline in imports and exports? Has family businesses done better? So since you did, Dr. Sibley, and your co-author, Dr. Walker, you did a farm level survey with the 236 observations. Have you noticed that this import decline, is it purely a COVID-led lockdown, economic slowdown, or what happened that family businesses, afterward, did they pick up? Did they come out with the crisis? So this is the questions to Dr. Sajad. Sylvia Arsad, he has already replied, I can see. Dr. Mathur has raised also another questions to Dr. Asanka from IPS. Nobody can escape, presenting a paper on partial, model or CGE from Somes. So he has raised the question: Sri Lanka imposes 54% duty on Bangladesh exports on grains, while maximum duty for Sri Lanka exports to Bangladesh imposes only 12% on heavy manufacturing exports. So this kind of, the dispersions will be always there because those are being negotiated. And Sri Lanka and Bangladesh are not FTA partners. Rather, they are LDC and developing in the SAARC, in the SAFTA context. But this is there, But it seems that Bangladesh would gain more by having an RTA with Sri Lanka. Of course, so this is an observation. Maybe the speaker from IPS would like to comment on Soma's path who has made it. So this is the comments we have received in the chat box. So I will go first in in the order we had this session. First to Dr. Raihan and Mehtab, then Dr. Sawan Roy, and similarly to others. Floor is to you, Dr. Raihan.
Thank you, Dr. Dey, and thank you for the comments received. I think since we all had the time constraint, probably we could not present the paper properly, and we have to stop. And I'm quite sympathetic to other presenters too. I wish we could actually allocate more time for the presentation. But Dr. Dey, you were right that actually the regression needed more elaboration, and also kind of because we didn't have the enough scope. I'll ask Mahata to very quickly kind of share the slides which you wanted to do. But to explain the corruption part in the calculation of EBI, actually for the all 10 indicators, we scaled them on a kind of positive scale. So low value means low corruption, and high value low value means high corruption, high value means low corruption. So we actually put them into the Likert scale, and the way, and it was not an online survey, it was telephonic survey. And the sample selection was done, with a kind of randomly, stratified randomly sample, and then we approached those farms and over telephone, and the interview was conducted. Mahata, very quickly, can you show those slides and then just explain?
Okay, sir. Let me go very quickly. So I briefly go to the slide I missed. Okay. Let me quickly respond to what actually Dr. Shivi asked. So his question was regarding the stimulus packages, and particularly one thing that we found in our survey is that the small firms, as actually what Salim sir he was showing in his slide, that regarding the micro farms, the rate of stimulus package that was received was only 7%. In the case of small, it was around only 18 or 19%. So you see there is a large difference in terms of the farm size and the per percent of farms received with these stimulus packages. So what we found is that we didn't find any significant relationship between the stimulus package and the farm's performance. And what we also found is that why actually farms could not avail the stimulus packages, or what actually hindered them. We found that most of the farms said that it was a grant, it was actually a loan, and the procedure was lengthy. There was no stimulus package for their sector, or the difficulty related to banking services. Are only those farms, around 20 or 22% of the farms who received the stimulus package, they said actually that they suffered from the lengthy process, the difficulty related to bank-related services. So you see, the stimulus package, and there were also concern of the amount of the stimulus package that the farms actually received. So it was not, maybe it was not really enough to put them up above the loss that they incurred. Last but not least, we also asked about the loss there, how much they have recovered from their during in April 2020, how much they have recovered compared to the pre-pandemic situation, what they had in March 2020. And most of the farms said that they didn't recover at all. So their recovery stage is almost 57% of what they had in terms of what they had in the pre-pandemic situation. So our conclusion actually draws very frankly is that what actually Dr. Shivi asked, in line with that, there is a strong support needed for the micro and small firms, and the stimulus package needs to be eased up, and the stimulus package needs to be increased, and proper monitoring is required for the stimulus package distribution. So I'd like to stop here. Thank you, sir.
Thank you very much. Thank you, Mahtab and Dr. Raihan. So Dr. Sawan Roy.
Thank you, Chair, for the comments. Very well taken. And hopefully we'll revise, when we revise the paper, we will actually be addressing some of them. Can I ask my co-author Vasundhara if she wants to add anything on the question regarding the model?
Good evening, everyone. I would just like to add a little bit on the Ardl bounds test. As Chair mentioned that GDP and the variables that we have taken, they essentially move together. The Ardl bounds test was taken so that we can establish that they are indeed moving together in the long run. So that is why we have taken this analysis for reiterating that long-run relationship that these variables share with each other. Thank you.
So thank you. And I would, in fact, like to compliment the other paper presenters. I think this was a wonderful session. And thank you, Chair.
Thank you very much. Thank you, Dr. Roy. Now, next speaker, Siblia, can you respond to some of the queries and the chat box and also some of the queries raised by the participants?
Sure. So first, the answer to Dr. Shibli's question, how much difference we see from the first lockdown to the second one. So basically March 2020 to March 21. As I already mentioned, from the Oxford Stringency Index and also from Google Mobility Index, we see that the lockdown was less stricter in March 2021, and also the mobility was more during, again, in March 2021. And that was the first response. And definitely electricity consumption is more dependent on the production, specifically on manufacturing. So as we see, the factories were not closed during the second wave, the third wave of the second lockdown. So we see less of an effect in the reduction of consumption. Thanks, Chair.
Thank you. Thank you, Dr. Sujat.
Thank you, Chair, for your comments. And I'll just respond to the tariff one.
There was also comments from Dr. Somes.
Yes, I'll be responding to that too. So I just club both together. On the tariffs part, as far as your point is concerned, it was linked to the domestic tariffs, because during the COVID, as borders were closed down and trade was not taking place, or trade became hardest or the harshest reality during the lockdown. So it was suggested that tariffs at domestic level should be reduced, or there should be lesser compliance even at international levels to encourage even domestic trade and or to further facilitate the international trade. So this was all about that. As far as economic slowdown is concerned, Pakistan's oil import is 85% of its total. And only 15% of the oil consumed by Pakistan is domestic. So because of the oil imports slowing down, there was current account surplus, and even some of the imports have stopped. This has led to the surplus, and yes, the performance was because of a textile. So I'll just again link the textile part again to the tariffs. So because the textile was seeing the boom even in the international market. So this was all about these two things.
Okay, thank you. Thank you very much. Then Dr. Asanka, can you respond to some of the questions raised on your paper, the chat box by Somes and also by me, some of the questions? You don't have to address everything because we don't have much time. Maybe in a minute time, you can.
It should be me. For about that theoretically consistent, it is like earlier gravity models. Actually, they use, as you said, country's economic size, the distance variable, common land age, common colony, and there are a lot of independent variables. But there is this recent development which use structurally based reduced form of gravity models. They use time, country time, or country year, and country pair fixed defects to capture time variant and time invariant fixed defects. Time variant in the sense of Anderson, Wind, and Cook, they are multilateral resistance term. So this is these models based using fixed defects. They are more structurally and theoretically grounded. But I agree that this sign the triviality, and sometimes it is negative, it is a bit concerning. We actually tried to estimate using these old variables like geographical distance, economic size, and those set of dummy variables for common colony, common language, shared border, like that. Still, the results are same. We actually estimated for the total trade too, not the decomposed GVC components. Still, we could not find any different result from this paper. We are not using these variables, but our time, our fixed defects, they absorb these time varying and time invariant determinants. About the partial equilibrium, I'm not sure about these tariff numbers, but the simulation was based on an offensive list. A product was included to the offensive list if that product is imported by a country, either by Bangladesh or Sri Lanka, and whether we have a comparative advantage in producing that. So these highly taxed products may not be in our offensive list. So it is possible that there will be more trade gain, but this list provides a policymaker list they can use for trade negotiations. They have, because both countries have comparative advantage, they have the capacity to expand that product in the country. That's why we produce this. Thank you very much.
Thank you. Maybe we look forward to see your the final versions. We have lots of interest on it. So thank you very much. We actually completed on time, and I congratulate. As I said, I'm a timekeeper here, nothing more than that. So everybody followed time, and this, and made this very, very successful, this session. And compliments goes to all the speakers for presenting excellent papers. I mean, this is reminding me the pre-COVID days when we used to go to presenting papers in different conferences. So this is very unique, because these 5 papers, which are loaded with lots of new insights, and I congratulate again to all of them. Looking forward to see the second version. I hope Dr. Raihan will be able to publish it for the wider audience. And thank you very much for joining, presenting, and all the other panelists, the participants here, and those who have worked from behind in making it a grand success. So thank you. Round of applause to everybody in this panelists. So over to you, Dr. Raihan, and I close this session from my side. Thank you very much.
Thank you very much. Thank you very much, Praveen. I think it was wonderful, and the way you managed the session. And also, I must thank all the presenters, because I'm again sorry for not being able to give you much time, because all these are technical papers and needed more time to discuss and elaborate. But definitely, I think that's the exposure was there, and it has created interest. And I think many of the participants would be probably, looking for the papers and the next version. So we'll be very happy to share this. We are working on the versions, as Praveen mentioned, that to improve it further. I'm quite sure other paper presenters, they will be doing the same. So again, thank you so much. And we invite you for the next session. It's going to be a very high-level session with Professor Deepak Nair and Professor Evan Sovan. They will be speaking in less than half an hour from now. And they'll be speaking on recovery and the COVID impact in South Asia, in the context of South Asia. So look forward to your presence there in that session. And again, thank you. With this, we conclude this session.
Thank you, Dr. Salim.
Thank you. Thank you.
Thank you.